Our next presenter is Jamie Flegg, Chief Development Officer from Sigma Lithium. Due to a change in travel schedules, Jamie was unfortunately unable to join us live, but he made time to record a presentation for our viewers and answer some common questions here. Sigma is a near-term lithium producer with a large, low-cost, high-grade, and ESG-centric project located in Brazil. Sigma's market cap is approximately $4 billion Canadian, and it is listed on both the NASDAQ and TSX Venture Exchange under the ticker SGML, and has been one of the top performing stocks in the lithium space in 2022. With that, I'll turn it over to Jamie.
Thanks very much. It's a great intro, and yeah, very happy to be presenting in what is a really exciting time for the lithium space. And so we can kick off right from the title page. As you can see by the photo, we are currently in construction, building a world-class hard rock lithium operation, which we anticipate beginning production in early Q2 of next year. So without further delay, let's get into it. I will be making forward-looking statements today, and this language is available on our website should you choose to want to read it. We'll kick off just with a high-level kind of overview of the investment opportunity here. So Sigma Lithium is advancing, as I said, a world-class hard rock lithium operation in Brazil. In terms of scale of the project, this is world-class. So per our most recent technical report, our phase 1 and 2 operation projects that we'll be producing over 530,000 tons per year of spodumene concentrate, which alone puts us, among the top in the world. Importantly, in the coming weeks, we will be coming out with a preliminary economic assessment, which envisions adding phase 3 to this, and so would anticipate the annual production profile growing well beyond 530,000 tons per year. The phase 1 operation, as I mentioned, is in construction, was fully funded by $140 million equity raise we completed in December of last year, and is tracking on schedule and on budget. The reason that it's so important that we are a near-term producer is that we are currently in a very tight lithium market. There is currently insufficient supply to meet the demand that has been coming from the electric vehicle market. And as a result, we've seen lithium prices dramatically increase. And so recently we saw our peer Pilbara Minerals auction off 5,000 tons of spodumene concentrate, which is the product we produce, for $8,500 per ton, just to give a reference of where the rough spot price is. And remember that number because it will become relevant once we talk about Sigma's economics. With respect to the quality of our product, which is very important in the lithium space, we have a rare combination of extremely high grades. It's one of the highest grade hard rock lithium operations in the world, extremely low impurities. And we also have very large spodumene crystal size. And the combination of these things allows us to have a process flow sheet that is 100% dense media separation, meaning we use no flotation circuits, no chemicals in our processing facility, which in addition to creating a low capital intensive and low cost operation, also has numerous environmental benefits, including allowing us to use 100% dry stack tailings. So no tailings dam in this project, which is very important from an environmental perspective, especially given the fact that we're in Brazil. And finally, and on that note, ESG really should be point one on this slide. Our co-CEO, Anna Cabral-Gardner, is passionate about this and has been for the better part of 10 years, well before ESG was a namestay on corporate presentations. All of the business decisions made by this company are through an ESG first lens, and the environmental and social responsibility with which we have developed this project is what has resulted in us being in the situation we are today, with tremendous local support from our local communities, with a social license, with an operating license, and about to hit first production here. Just to take a step back, what are we actually doing? So as I mentioned, the product that we produce and generate revenue from is a spodumene concentrate. And so it's a pretty straightforward process. It's conventional open pit mining. That ore material goes through our green tech plant, which, as I mentioned, is essentially mechanical. There's no chemicals used, so it's crushing, dense media separation, and some sorting, and we generate this kind of gravelly concentrate, which I'll talk about it in a few slides. That gets shipped to our customers. We have an offtake agreement in place with LG Energy Solution. Currently, just based on where the hydroxide conversion capacity is, our material is envisioned to be shipped to China for conversion to hydroxide. The hydroxide chemical then gets used in the cathodes, which feeds the electric vehicle batteries. And so here we show, there's a lot of numbers on this slide, but I'll focus in on a couple of them. These numbers are from the most recent economic study that we released in May of this year, which was a feasibility study for phase 1 and a pre-feasibility study for phase 2. And it shows the combined economics of both phases. And the result of that was quite compelling. So it's over a $5 billion NPV, close to a 600% IRR. And these are all US dollar numbers, on a capex for phase 1 of $130 million. So tremendous capital intensity and tremendous margins. When you think about our all-in cost to produce this per ton is $455, and that includes our shipping cost to China. And you take that number and then you think about where spodumene prices are today. As I mentioned earlier, Pilbara just sold 5,000 tons for $8,500 per ton. At that price would imply $8,000 per ton margins. And again, we plan to be producing well beyond 530,000 tons per year of this material. One thing I'd like to just re-emphasize here is, again, these numbers are only for phase 1 and phase 2. And we will have a PEA coming out before the end of the year that will introduce phase 3 into this operation. And so bringing that production forward and obviously adding incremental value to the project. Just quickly on the corporate structure, I think that, would like to zero in here on the shareholders. So as I mentioned, we did a large equity financing in December of last year. We were very happy that BlackRock participated in that in a big way. They wrote a $50 million check. They're now our second largest shareholder. They've actually been invested since the IPO in 2018, and so we have an excellent relationship with them. They're very up the curve on the project, done a tremendous amount of due diligence, and we're very happy with their continued support. Our largest shareholder is A10, and A10 is a private equity fund out of Brazil and is entirely made up of management of Sigma and board of directors of Sigma. And so A10 owns 47% of the company, and you can think of A10 as management. So essentially, management has a very large equity stake in this company and is 100% aligned with all shareholders. The other thing I would flag on this chart is obviously strong balance sheet. So these numbers are fresh as per the quarter we just put out. US $60 million of cash remaining, no debt currently. And then finally, when you look at the share chart, one of the things that I was brought on to do earlier this year in opening the Toronto office was really try to reinvigorate the corporate development and investor relations program with a focus on getting more eyeballs on the story and more liquidity in the stock. And we're currently now up to a $3 billion market cap and regularly trading $20 to $50 million a day. So this is kind of becoming an institutional name as we head towards production. As I mentioned, we are located in Brazil. It's a fantastic mining jurisdiction. We're in the province of Minas Gerais, which is one of the best mining provinces in the world. Site is a 25-minute drive on paved road from the local town of Araçuaí. We have access to renewable and cheap hydroelectric power, not dissimilar from Quebec for I assume it's mostly Canadians on the call. With transmission lines running right to site. We have access to water, which is actually non-potable. We have to treat it before it goes through our plant. With water licenses in place, and then we recycle most of the water that's used in the plant anyways. It's almost water neutral. We ship our product to, or rather we truck our product to the local port, and then ship it to wherever it needs to go for our customers. Currently, that's envisioned to be China, but we suspect as the supply chain matures and capacity starts to come online closer to home, that could be future upside potential for us in terms of lower costs on shipping, but also, more importantly, lower emissions for the supply chain. And here's an overview of what we're actually building here. And so, as I mentioned, phase 1 is currently in construction. We anticipate production coming online roughly in April of next year, and that will produce 270,000 tons of our spodumene concentrate. What we're currently envisioning, and this will come out in the PEA that's set to be released shortly, is we're looking at, instead of doing 2 separate expansions, which we had been envisioning in the past, we're now looking at just building out one larger expansion. And we talked about this in our investor day in September. And so what that would look like is basically on the same timeline that phase 2 is envisioned, so coming online likely in 2024, we would have a larger expansion case that would bring on the phase 2 and phase 3 material faster in the operating life. And so I can't speak about it too much more other than that until the PEA comes out. So that's an important catalyst that we're really excited to bring to the market. And again, we would expect to have that out in the coming weeks. And as you can see, so this slide just basically shows the scale of what we're building here relative to the global comps. And so on the left side, we show the producer universe, and you can see in the light green is our phase 1 and the dark green is our phase 2. Again, phase 3 has not been incorporated yet into this bar chart. So I'm excited to get the PEA out to actually be able to add it. But we comp our phase 1 and 2 production to the peers, 2021 production in light gray, and then estimated 2024 production in dark gray. And so what you can see is that currently we would be one of the top producers of lithium globally. But as we put our expansion plans into effect, along with our peers, based on our growth, we remain one of the top producers of lithium in the world, which is really exciting. Which is really exciting for our company, and the same remains true when you look at all of the developers. Again, just highlighting that this is a very large, very large scale and relevant project. And with respect to valuation, what we're showing here is just market cap on the bars, and then the bubbles show the annual production profile. And so what we've been talking about for months now, since we raised the money in December and became fully funded to head into production, is we're on this path of re-rating to producer status. And so you can see where we sit kind of amidst the developers in green and blue. Just comping our equity value to our projected annual production. And it's very clear to when you look to the left at the kind of producer universe and how much product they're bringing online per year, that where the trajectory of this company is headed. And we get a lot of questions when people look at our share chart and say, well, the thing has been a frozen rope upwards and right. Have I missed it? And this is the slide we always point to, which is, look, when if we had a meeting with you in March, we were a $1 billion company, and we clearly outlined where we thought we were headed as we re-rated to producer status. And so, our view is that we're still on the way to getting to where we should be valued as a producer, again, expecting first production in April of next year. And just to highlight, again, and this is one of the reasons why we feel that we should anticipate a re-rate on production is folks will start to wrap their head around the robust cash flow potential of this project. And so this table just outlines EBITDA for phase one only, just to show what next year could look like. And these numbers are based on a lithium price of $2,500 per ton, which is pulled from our most recent economic study. Okay, so at $2,500 per ton, just for phase one, which is next year, we would anticipate EBITDA of $550 million for the year. Again, important to note that as early as last week, Pilbara was selling, tonnage for $8,500 per ton. And so, you folks can do the math on the potential cash flow here at kind of more realistic current prices. And then when you bring phase two into the mix, obviously that continues to become more robust. And then again, looking forward to being able to adding phase three to this slide in the coming weeks as well. And the reason that the cash flows are so robust, obviously the low capital intensity and high margins, but what we are producing is a world-class product. And so, as I mentioned, very high grades, but importantly, very low impurities. So very low iron oxide, very low mica, and you can see where we stack up next to the peers. And because we do not have to, because the quality of the deposit is so good, we can generate economic recoveries without having to use the flotation tanks, which allows us to generate this gravelly concentrate that you can see in the photos on the left-hand side. Again, main benefit from an environmental standpoint is that this allows us to use 100% dry stack tailing, which has huge environmental benefits. But also, when you do the conversion from our material to hydroxide, it's actually more efficient than doing the comparable, more fine material that you see in the photos on the right, which have gone through the flotation tanks. Actually, it's estimated that it takes 7 tons of our product to generate a ton of hydroxide versus 10 tons of the similar fines. So more efficient, lower cost for our customers, which is why we've had a tremendous amount of interest in our offtake and have in fact signed a term sheet with LG Energy Solutions for a piece of both our phase one and phase two production. I'm getting low on time, but this is really the key update that I think folks are going to be excited about. So I'm just going to go quickly through this and flash some photos to end, if that's okay. With respect to the construction update, so we are essentially through detailed engineering, which is critically important. Dry plant is 99% complete. The DMS plant 94% complete, and electrical substation 50% complete. With respect, and I'll talk more about the actual components as I hop through the photos in a minute. With respect to the timelines on the plant, again, we plan to begin dry plant commissioning before the end of the year in December. We'll begin wet plant commissioning in February, and we anticipate having first production in April of next year. That's the current timeline. That's what we've been guiding, and we reaffirmed that in our quarterly results, which came out last week. With respect to the actual mine itself, pre-stripping is completed at the North Pit, and ongoing at the South Pit. We are in a position to be mining imminently, and we'll be able to begin stockpiling material to feed the plant as it goes through the commissioning process. And so this is the exciting stuff. What you can see here is a very, very well advanced photo of our crushing circuit. And so primary crusher on the left, secondary crusher on the right, and then tertiary crusher in the distance, with the conveyor starting to be built out further in the distance in the photo to what will be the dense media separation concentration plant. And again, more photos of the crushing circuit. As you can see, this is very well advanced now, and we remain on target for the dry plant commissioning to begin in December. You just see the run of mine wall in the background for the crusher. And you can see some of the site infrastructure starting to go up now again as we head towards beginning commissioning. We have over 700 people on site right now, aiming for 50% local. We're going to be increasing that. I believe the current view is to 1,000 folks on site. So again, this is a big operation and well progressing. And then just again, photos of the actual, so you can see where the pre-stripping has taken place, and we're now into the ore and ready to begin mining. So I guess I'll leave it there, and you can ask questions. If one of the questions is about exploration, that's the section that I was just about to get to. So we'll let the questions dictate where we take it from here, because I think I've gone a little over.
Thank you very much, Jamie. Great presentation. So we do have some questions here, and let's start with this one. Investors have seen a lot of recent volatility in the sector. Last week, we saw unconfirmed rumors of a decrease in cathode production from China in a note from Credit Suisse and Goldman Sachs reporting that supply will outpace demand by 2023. Can you share your thoughts on this?
Yeah, sure. I was just at the Benchmark conference in LA, and so that was a good place to be when there were these types of rumors circulating. Look, it feels almost identical to what happened in early June when Goldman also put out a bearish report. That was on the back of a couple of months of tremendous returns in the sector. And so the view is it was a fantastic opportunity for people to have an excuse to take profits, right? At that point in June, the entire sector basically dropped 20%. A bottom was found. Folks forgot about Goldman's forecast and focused on the fundamentals. And then things came roaring back and well beyond where they were, prior to the drop. This feels very similar, again, kind of propagated by this, Goldman report, which is nothing new. They're just reiterating their views that we already knew. And this rumor out of China, which, again, what the scuttlebutt at the kind of benchmark week was, half the crowd is calling it, as you defined it, an unconfirmed rumor. We heard folks that were saying there were sources in China that kept coming out and saying it's just not the case. The cathode guys are business as usual and production as usual. And so, it feels like, the sector's had really good returns again, similar to in June over the last couple of months. And so this was just a good excuse for kind of tourist money and shaky hands to take profits, which obviously propagated selling. It seems to have settled out here now. And our view, and certainly the view of the kind of, what I would call smart money in LA, was that this is just presenting another fantastic buying opportunity.
So having recently released your Q3 financials and based on this presentation you just gave, it looks like you're well on your way with construction. What milestones should investors expect from Sigma in the near future? And feel free to talk about your exploration plans as well here.
Yeah, so the next key milestone for us, as I mentioned, is the preliminary economic assessment, which will detail the kind of new expansion case that we're envisioning, which is a phase 2-3 combined expansion case, which is anticipated to come online in 2024. And so we've never put economics around phase 3 before. It's just currently at the resource stage. So really excited to get economics around a phase 1, 2, and 3 scenario with the larger expansion case coming online sooner. That's the first thing. The second thing, I think, and the question we get the most is just construction update. How's construction going? When's production? Because at these prices, again, this thing is a absolute cash factory. And so, catalyst would be before the end of the year, getting the commissioning started on the dry plant. And then from there, getting through the, roughly 3-month commissioning process. With respect to exploration, we have been drilling out phase 4 and would encourage you to take a look through our MD&A. We actually put out some drill results from the phase 4 drilling, which are quite compelling. We are going to be adding to our phase 4 resource and an updated mineral resource estimate, hopefully by the end of the year, but maybe into Q1. And so as we start to bring on phase 4, 5, 6, 7, whatever it is, as we go and do exploration on the additional past producing mines that are on the property, now that we've got the production scenario to a very, very sufficient place, we can now start to think about operating life extension, which phase 1 and 2 was 13 years. So phase 3 will extend it from there, and then the future phases will continue to extend that out.
So final question here, would you be able to shed some light about your offtake agreement with LG and the lithium pricing in that agreement?
Sure, yeah. So it's currently envisioned as 60,000 tons for phase 1, 40,000 tons for phase 2. So 100,000 tons total. We have the option to increase it to 150,000 tons. The pricing mechanism as currently envisioned is that it will track the floating hydroxide price, likely using fast markets or similar benchmark. And then we would take a percentage of that floating hydroxide price to get to the spodumene concentrate price. In our technical report, we use 9%, which is roughly the current kind of spot ratio between hydroxide and spodumene price.
Perfect. Well, thank you very much. Or you got more? Go ahead.
Yeah, and then I'll just add one final thing is, well, obviously we do not have 100% of our offtake committed, and that's by design for a variety of reasons. But again, just look at Pembera. I mean, they're having 20 to 30 bidders on 5,000 ton lots, and the winner going for $8,500 per ton. And so in this current market environment, we're very comfortable and very happy, certainly, to be selling our material into the spot market.
Well, thank you very much for joining us today, Jamie, and you have a great day.
Cheers. Thanks for having me.